Hello students, so in this final video I'm going to be doing question 718 section C, but instead of recording the transactions in the general journal of the partnership, I'm going to show you the capital accounts of the partners, the general ledger accounts. So the required of the question is that we're going to prepare the capital general ledger accounts of the partners on the 1st of July 2009 to take into effect the admission of Amber. So if we look at the information, we had Jade and Lilla as partners in Jacaranda Paint, and they were sharing profits and loss in the ratio of their capital contributions. This was their capital contributions as at the 1st of July 2009. This information comes from section A of the question, and these are their current account balances at the 1st of July 2009. They tell us that Amber is admitted as a partner on the 1st of July 2009. So before Amber can be admitted, they would have decided what the goodwill was worth that was created by Jade and Lilla. So what they tell us in the question, that Amber will receive a quarter share, that's 1/4 of the profits in the entity as a whole, and that Amber will have to pay 75,000. And this includes 4,000 for his premium of goodwill. So in other words, that 75,000 has been calculated to include 25% or 1/4 of the goodwill that had been created by the previous partners in the business up until that point. So Amber's paying a premium to them, to the old partners. It's going to come into the partnership's books. His contribution is including an amount that's been calculated for goodwill. And for the purposes of Amber's admission, the assets are revaluated as follows. Revalued, 50,000 increase in the value of land, 8,000 less for the value of equipment, and debtors, it's estimated the amount that will be received will be 2,000 less than the outstanding balances. So we need to create an allowance for credit losses on debtors. And they tell us no goodwill account must remain in the books of the entity after the admission of Amber. So after the admission of Amber, we are going to reverse the goodwill that's created before the admission of Amber. So the first thing we do in the capital accounts of the partners and put in their opening balances. These are the amounts that have been contributed by Jade and Lilla to the partnership up until this point. The next thing we do is we put in the goodwill that's been generated by Jade and Lilla before Amber joined them. The way this is calculated is they tell us Amber's going to be taking over 1/4 of the partnership, and his 1/4 share of goodwill comes to 4,000 Rand. So if we take 4,000 Rand and divide it by 4, we end up with 16,000 Rand in total. So the total value of goodwill up until the point Amber joins that's been generated by Jade and Lilla is 16,000 Rand. So we're going to create an asset in the books of the partnership, debit goodwill with 16,000, credit Jade with his portion of the goodwill that was created, and credit Lilla with her portion of the goodwill that was created, which is 40% of the calculated goodwill amount. Then in the question, they also told us that land increased in value by 50,000. So we'll debit land with 50,000 and we credit Jade with 60% of the 50,000. That's Jade's portion of the increase in the value of land in the partnership up until the point of the admission of the new partner. So we are updating the asset values up until the point of the admission of Amber so that we can take those increases in values to the partners who were partners in the business previous to that. So this increase in the value of assets actually belongs to them and is being credited to their capital accounts. So we have a total credit here of 50,000 and the debit is to land. Then they tell us that the equipment actually needs to decrease in value by 8,000. So the equipment in the books of the partnership are overstated. So we need to credit equipment, and we debit Jade with 60% of the 8,000, which is 4,800, and we debit Lila with 40% of the 8,000, which is 3,200. So now we're reducing the assets in the books of the partnership, and we're taking the reduction in the assets to the debit of the partner's capital accounts, which effectively reduces their investment in the business. So this equipment lost value during the time that they were partners before Amber joined. So there's therefore been a reduction or a loss in the investment in the business. We also need to create an allowance for credit losses of 2,000 Rand because they're debtors that they believe won't pay. So this is also decreasing the assets of our business. So 60% of that allowance is going to be debited to Jade's account, and 40% of that allowance is going to be debited to Lila's account. And the credit is going to go to the allowance for credit losses account, which is a negative asset account. It reduces the value of debtors. So again, what we've done here is we've taken the reduction in the value of debtors, and we've actually debited that reduction to the two partners' capital accounts who were in the partnership before the new partner joined. So now in the capital accounts of Jade and Lila, we've got their original balances plus the adjustments for the value of the assets at the time when the new partner joined. So the next thing that happens is that Amber puts his 75,000 into the business. So we're going to debit bank receive the money and credit Amber's capital account with his contribution. So the profit sharing ratio was 60% was Jade's share, 40% was Lila's share. That gave you a total of 100. Amber is going to get 1/4. 1/4 is the same as 25%. So that means we have to reduce Jade's share by 60% of 1/4, 25%, and we have to reduce Lila's share by 40% of 25%. So 60% times 25% gives you minus 15% for Jade. 60% minus 15% means Jade now will own 45% of the partnership. Lila, we take away 40% of 25%, which is 10%, and Lila now owns 40 minus 10, which is 30% of the partnership. So if we add 45% plus 30% plus Amber, who now owns 25%, the new partner ratio is 45, 30, 25%, which gives you a total of 100. So what we now have to do is we have to reverse the 16,000 Rand goodwill that was created. Remember, the goodwill was debited and we credited Jade and Lila's capital accounts. Now we're going to reverse the 16,000 Rand, but now we're going to reverse it in the new profit sharing ratio. So we're going to reduce Jade's account by 45% of the goodwill amount. We're going to reduce Lila's account by 30%, which is 4,800. And we're going to reduce Amber's account by 4,000 Rand, which they give us in the question. That's 25% of the 16,000 Rand goodwill. So each one of the partners' capital accounts has now been reduced by their share of the goodwill, and that's been calculated using the new profit sharing ratios. So the final thing to do in this question then is just to calculate the closing balances. Jade has a closing balance of 146,400. Before the admission of Amber, his balance was 120. It's increased because there was a net increase in the value of the assets that was journalized before Amber joined. In the same way, Lila has also increased from 80 to 97,600. Amber paid 75,000, but 4,000 of that was for goodwill, and we've reversed the goodwill. So that means Amber's capital account is sitting at 71,000. So when you are doing partnership questions, you need to know journal entries, but you also need to know what the capital accounts of partners will look like on admission and retirement.